some people recently can be very uncertain, perhaps confused about where the economy lies right now. And the way I think of it is how you receive news about the economy. 3 locations. First location is Capitol Hill. Shutdown, tariffs, uncertainty, gridlock, and maybe you have kind of a down view. The second location is Wall Street. It is tremendous volatility. And again, it raises the specter that maybe there's increased uncertainty. Maybe you walk away after looking at those 2 areas with kind of a down view. The most important area is Main Street. Main Street's stable, and Main Street is in very good shape. And while Capitol Hill and Wall Street can influence economic activity, it's Main Street that determines it, at least in the near term. So what does Main Street look like? Well, it's characterized by a very strong labor market. We've been averaging over 200,000 net new jobs monthly, year in, year out. That's quite a feat. And we've knocked the unemployment rate down from 10 to under 4. We're expecting this general strong labor markets to continue, maybe lose its edge a little bit, but that provides tremendous support for Main Street, for the economy. Provides it for construction. More jobs you create, more money you create for state and local government revenue collection. The more jobs you create, the better prospects are for home ownership and housing expansion. And the more jobs you create, it goes underlined to support the ROI for net operating income for non-residential properties. It's all there. It's all tied into it. What happens in the labor market has direct and strong impact in terms of what's going on in terms of the overall economy and the construction market. When you start to have this continue, which we're expecting it to, the unemployment drops below 4%, which it has. And what you start to see is accelerating pressure on wages. It's one thing to go from 5 to 4. You're not going to get much. When you start to go from 4 to 3, well, you're going to see increased pressures on wages. Strong labor market. Wages are rising. The Federal Reserve recognizes what potential this means for interest rates or for inflation. It has pursued a steady increases in the federal funds rate. They've been on this path for a number of years. We're now 2%. First car I bought was over 18%. So while we have rising interest rates, from a historical perspective, they are still low. And inflation, and even though that's starting to increase, still remains relatively benign. Most wealth by the guy on Main Street is generated by the equity they hold in their homes. They feel wealthier as you see sustained gains in home values. So when that person walks out their door to go to work, to get higher pay, and interest rates are low, and inflation is low, and my home prices are rising, what do you think they are? They're very confident about current economic conditions, and that means they're more willing to take that dollar out of the pocket and spend it.